This here, I got about 4 of these in my email box, 4 Glauber. Before he spoke, this is chief economist for the USDA. This is what he spoke on yesterday, both days. Somehow appeared in my inbox before he actually gave the speech, so I was like, I'll throw it out here and show you guys what they're looking at. So we get some really good information, to say the least, at the office, and I've got some good contacts. This is right directly from, like I said, this is what they rolled with at the Ag Outlook. I'm going to focus this whole thing on, I was just talking to guys here, 13 crops is a concern, but it looks like the insurance is going to be right where we were last year. We just had the conversation, 568, 570, somewhere in that ballpark. It's 14 that's a little bit scary, and 14 that's a little bit of an issue. I know I've got guys that I work with one-on-one that are concerned, deeply concerned about 14. And I think we have to take this time to look a little beyond the current year here, and we have to keep a little vision a little further out front. So I'm going to walk you through kind of what the USDA is seeing coming down the pipe and why they're coming up with a few of their numbers. Then I'll roll into my slides. I thought if we had, since we had the slides, hell, we might as well show them and run them. U.S. ag exports projected at record high. Obviously, this is a no-brainer. We see what's happening and taking place. China remains the top destination. Just like they said, 63% of the beans, or 60%. I hear it all over the place. Agriculture exports for second straight year. Here you are with China, as you can see, but there's a little bit of a downtick in 13. European Union, a little higher, Canada. They're just top destinations. I think this gives you guys a good look at where we're at. And this is, like I said, the USDA information and charts. Soybeans and cotton, this is interesting, I thought. Soybeans and cotton account for 2/3 of U.S. agricultural exports to China. Pretty amazing. This here is your soybeans, the big, huge chunks. Soybeans, cotton. So, like I said, I think the USDA is making a big point of that. I don't agree with Bergler in the fact that China buys on the break on beans. I've said this numerous times. I think China is a quantity buyer of beans. They're going to buy whether the shit's at $18 or whether it's at $12. They're a price buyer of corn. I'll agree with that. I just got an email before I came up. China bought, one of their feed millers bought 4 cargoes of U.S. new crop corn after the close, 240,000 metric tons. Good news. That's good news, even though we broke. So I told you in this morning's report there are rumors going around that they were pricing some corn or U.S. corn for 2013. Supposedly it's for SEP delivery or past SEP delivery on new crop. So China's a price buyer for sure of corn. Beans, quantity buyer. Make sure you understand that. They're going to buy 20, 30 cargoes. They just buy it at a clip no matter what the price is. They've thrown the towel in on the bean production. They've made that a political statement. They've made that a statement moving forward, and I think you're going to continue to see that. I think the USDA said they're going to be importing 100 million metric tons. That was in their 10-year projection. They're going to continue to increase their imports. That's really all it is. The question is, are they going to increase them at the pace they've been increasing them? Or is production going to outpace their demand increases? Right now, it looks like production is going to grow faster than their increases for demand. That's a little bit of an issue. That's what we're going to talk about and address. Export values, they talked a little bit about this in the various commodity categories. Look at beans. I mean, beans are just explosive, no question. We go here. There's a couple of slides I did want to show you that's pretty important. Export volumes flat or down for most commodities. This is a little worrisome. Look at corn. Boom. Here you are. You're going to have some issues here on the corn export front. We're going to get into more details on that as we progress, why we have to be a little bit concerned. Brazilian corn exports. Holy shit. Surpassed the U.S. exports. Look at that. Here's Brazil. These are all these little baby numbers. Look what happened. Like Robin tells me, we always say, be careful wishing for higher prices. Guys, I own farm ground in Brazil, and these higher prices have allowed these people to do some pretty significant things in their infrastructure. Soren Schroeder is one of my good buddies. He just got named the CEO of Bunge Global. Michelle and I were out in Washington. They gave us a big tour of the their new export terminal out there in Washington. I thought it was pretty interesting. I told the guys back at the office, I couldn't believe it. Huge terminal. I don't know if any of you have been to it out here, the one in Washington. Neat deal. I mean, it's huge, and there's basically no employees. They got like 10 people working there. It's unbelievable, and the amount of grain that pours through there. Everything's automated, but what I thought was pretty neat is they're the first export terminal. Now think of this. The guy told me, I said, are there any glitches or what kind of things you guys see that are problems? He knew I was one of Soren's good friends, so I think he was a little shaky on saying anything to me. He was like, oh, your friend's, Soren just got named CEO, and yeah, and I said, yeah, so he didn't really tell me a lot of details, but he said, think about it this way. Ford and GM put out thousands of cars, a week, and they've been doing it for years, and the technology, they're able to, we all get cars that have glitches or little problems and things, and they're able to fix them and overcome them. First U.S. export terminal built out there in 25 years in the United States. Tell me how much you think technology has changed in the last 25 years. They don't have rollers. The corn comes in, never sees anything. I mean, it's a neat operation. You get up, they grab the train. They'll have 110 car rail, 110 car trains coming through, 2, 3 at a time. Corn never sees any air, comes in, hits thing. They're like, there's no, on the conveyors where the corn moves, there's no traditional rollers or bearings. It's all air driven, all through air and things. So they don't have to fix any of the rollers or have bearing problems. And everything's automated. Robots grab the corn, grab the train. As far as the cars, release the corn. Everything's done robotically. And there's 3 guys sitting in like a mission control center like NASA and just watching and monitoring everything. They got cameras that go right down to like see what you got in your pocket. And there's 4 longshoremen out on the giant boat that they're loading for. When I happened to be there, they were loading a boat for China. It was a pretty neat deal. It takes them about 2 days to get the boat entirely loaded. But the point of it is, we haven't built a new export terminal in 25 years. I mean, think of the technology, the new technology, and how things have changed. In Brazil, Soren called me. We were on a conference call. We were talking. He said they put 4 new loaders. There's 4 new loaders expected to go in at the Brazilian port within a course. I think I wrote it in a report. I told you guys. He told me over the next 36-month period, I think they're going to phase these loaders in every 4 months or somewhere in there, 5 months. But the loader's supposed to double, triple capacity on how fast they can load. So big, huge deal. And the issue is they're getting all this money and pouring it right into infrastructure and building the infrastructure to feed the world or to try and export to the world. We didn't do that originally. I mean, we built our infrastructure, and don't get me wrong, we're the best. We're still by far the best, without question. But I'm not sure we're moving as fast as some of these other countries that are seeing these big gains from the prices that we've seen. So we have to be a little bit careful. I heard another interesting theory while I'm on that topic. One of our world traders and one of the global people I talked to said, you know what your guys' problem is in the United States? I said, what? I'm like, oh shit, here we go. He said, storage. That storage just kicks your guys' ass. And I'm like, what? I'm thinking, this guy's nuts. Well, yeah, shit. You guys just store it. See, so you guys try and jack around with price and everything. We don't have any storage or anything. We just flood the market. Out the door it goes. And it kind of, if you think about it, it's kind of weird and different, but I see what he's saying. Here all of a sudden, Ukraine, boom, just dumping grain on the market. Just get it out, sell it. Brazil, dump the grain on market, sell it. No storage. It's going to probably be a similar trend that continues. We're going to keep building more and more storage. They don't have any storage. They're putting their money in more of the exporting and infrastructure of that type, not really necessarily in the storage side. So it could be a little bit of an Achilles heel for us as U.S. producers. I like the fact to build more storage, but in this shuffling that we're playing of expansion, contraction, might be a little bit of an Achilles heel for a short period of time or until we get to some more stable ground. So I just want you to be aware. Look at that. I mean, that's just unbelievable where Brazil is coming on this corn export thing. We go here, global ending stocks tightening for grains. That's kind of a hindsight, lowest since 73, 74. That's going to tell us where we've been, not necessarily where we're going, i.e. the word ending stocks. We have to keep our eye on that. We're not really sure that global demand is going to continue to outpace the production side. China builds cotton inventory. I think it's just unbelievable how China is with their hogs or with their cotton. Here's the rest of the world's cotton. There's China's cotton in the blue. Pretty amazing. Get one more USDA stuff. Much of the area exiting CRP is located in the plain states. I think that's interesting stat, like I said right there. You can see a lot of information. I think you're seeing your biggest areas, North Dakota, obviously the biggest, exiting, keyword of the CRP ground. So when they're talking about these acres coming on board, I think the USDA was conservative in their corn acres. I don't want to, I try not to bullshit you guys and come out here. I love to be bullish too. I like being bullish. I'm usually always bullish. But I'm not so certain this 96.5 million they came out with today and yesterday on acres, they're going to go higher with it. I'm telling you now, I bet you dollars to donuts that moves higher, weather willing. I don't know anyone who's, I've listened to farmers tell me year after year, you guys are going to, you're going to, oh shit, corn on corn's killing me. We're going to go to beans. We're going to put more beans in. You guys lie to me. That never happens. That's bullshit. I write it every year and it doesn't happen. You throw me under the bus. And I think it sounds good in theory until we get to Fed March and then we pencil it and it's like, whoa, shit, back to corn on corn. So I don't see that many. I know there's some areas, don't get me wrong, I know some guys in Iowa, I know some Illinois guys are going to go to a little bit more beans, but not significantly. I think Richmond and some of the guys in the Dakotas will tell you there's a ton more corn going in up there. Would you guys agree? Huh? Yeah, I hear you. Yeah. No, I agree. And I just think there's like, I'm not saying it's going to produce bumper bushels or things of that nature, but there's, everywhere I go, everyone wants to farm more corn. I mean, the cotton guys are wanting to do corn. There's guys up through the Dakotas all want to do more corn. Everywhere we go, it's just more guys wanting to talk about corn. We were at Top Producer. Shit you not. And I'm sitting there drinking. We were having some beers one night. These guys were from Oregon. I said, what the hell are you guys doing here? Shit, we want to figure out how to grow corn. I'm like, are you kidding me? So out here in Oregon growing corn, I went to Washington and spoke, but people out there growing corn now. So I think Tommy said, like Safi, a lot of people up through the north growing corn. So I think you're going to see those corn acre numbers probably move higher. Planted acres, like I said, here's their projection. I like just looking back at the data they throw on here for us. 96.5. So they say we're going down from last year. I don't know. I think that one's a tough one to swallow. I think that's probably good. I'm not one of those guys that says we're going to have 100 million like Informer, 98, 99. I mean, I think we're going to be a little higher than that, though, 97.5 maybe or something. So we'll probably add 1 million. You look here at the beans, I think you can go through the numbers. They're pretty self-explanatory. I don't believe we're going lower. I just don't see it. Guys, too many guys had too good a year. There's too much ground that's being just put into agriculture. I just don't think that. I think they gave themselves room to work. Let's put it that way. This is just what was on his slide. So this was on Glauber's slide from the USDA. Drought persists across much of the United States, just like they said. He says this, puts this slide in, and then comes out 163.5 yield. Shit, you tell me. I don't know. I mean, I'm not sure that makes a lot of sense, but so I think, like Drew said, I think you're seeing this drought move a little more this direction. And as we get into some things, I have a hard time with this fact right here. Illinois and Iowa, your two big enchiladas on production, got smoked last year. I mean, they got crushed. I'm just not sure in a world weather format, those two states can get hit that hard again. I mean, I'm not saying it's not possible, certainly possible, but the odds of those two direct states just getting hit like they did last year, as hard as they did, I'm not sure it happens. If that drought doesn't hit Illinois and Iowa, and it stays this direction last year, shit, we're probably 150 yield. I'll bet you they make up that much production. Those two. You move this way, you move this direction. Shit, my Kansas guys were producing 180, 200 bushel yield, some of them. It's irrigated. Nebraska's pretty irrigated. Now, some of the areas aren't. And I know they sunk a lot more into the water, but you move this drought this way, that irrigated ground, not too bad. Let me ask you another question. What did you hear from Ken Ferry? He said shitloads of dollars are going into irrigation. All through here. Illinois, Iowa, all right through there. I've seen them doing it. Watched all these guys telling me. So even if the drought does hit there again, I think you're going to see a little bit better preparation. So I'm fearful that this But these yields aren't going to be as low as a lot of folks think. I'm with Drew. I'm not saying we're going to have record yields because I think the subsoil is going to be dry, and I know parts of Nebraska and Iowa are going to be dry, but you get Illinois in a sweet spot and get a portion of Iowa back to producing. Indiana's wet, Ohio's wet. I think this thing might surprise you on what some of these traits can do. He threw up this drought persists across much of the U.S. I think same thing we're seeing, but you see how he's kind of splitting it off. Once again, the color's so bad you really can't tell a whole lot. Corn and soybean production projected to rebound. Holy smokes, 14.5. Record crop, corn and beans. This is what they threw up on the screen out at the USDA this weekend, or this week. You go 14.5, guys. There's people say sub $4 in corn. 14.5 billion crop, you could be sub $4, real easy. That number right there, 3.5, you go 3.5 bill, there's guys talking $9 beans. Big money players making those kinds of statements. Here's your correlation, preseason precip and Iowa corn yields. He just kind of draws the trend line up and down. Pretty neutral. As far as that's concerned, I don't think you see any, grave differences. Weekly ethanol production. I can go through this ethanol thing backwards and forwards. We believe that ethanol is probably I think it's going to go up from here. I think you're going to see production increase just a little bit. I think the USDA is on the same track. There's talk that right now we could be below the 4.5 billion, but we think we're weeding some guys out. The margins are obviously good. This is granted crude oil stays strong. Like Rasafi said, we lost $5 in crude this week. It's going to hurt the margins, and RBOB takes a hit. So ethanol is a little bit of a question mark. We believe it's peaked. Well, I'll show you some better slides. U.S. corn use for ethanol rebounds, but below 5 billion bushels. This is what they're kind of saying. We peaked at 5 billion bushels. Look at the demand growth in ethanol. See, we've been adding 500,000, 600,000 bushels of demand in ethanol every year to offset any technological gains or more acres or things that. Shit, we're not going to gain any ethanol here, guys. We're going lower. We were at 5 billion, we're going lower. We think we can stabilize and base out in those areas, but I don't see those gains that we were having back in here that fueled this whole thing. This is when the funds started going nuts, 05, 06. And look what happened to ethanol. Boom. Like Tommy said. What did he say he trades corn as? An energy, a fuel. Those guys are nuts like that. I mean, that's what they look at it as. And that's when this shit took off. Well, now everybody's leery about it being a fuel. They're a little concerned here. They're not sure how this is going to play out. Motor gasoline, problem. U.S. projected to decline. Look at this. This here is Energy Information Administration's annual energy outlook. Look what they were saying in 08, in 2011. They thought, and look at the years here. 2040. I mean, look where we're at. Look what they're saying now about motor gas projected to decline. That's a problem for ethanol. That's a big problem. I mean, I think they're probably right. It seems like guys have figured out how to, whether it's carpool or vehicles have gotten more fuel efficient or we've gone greener and more energy efficient. That's going to be a concern. I think the USDA is looking at that and seeing how that's going to play out. Commodity prices fall from record levels. Here's your corn. I mean, as you can see, they're going back down 33% they're projecting. They're projecting down 26 in beans. Like I said, those are things we need to digest and we need to look at as we move forward. We'll talk about them. I just want to show you what the USDA is saying. High feed costs keep feed ratios at low levels. I think it's pretty self-explanatory. Dairy, broilers, and hogs. I think that's a no-brainer. Livestock, dairy, and poultry prices projected to increase. I think we talked that last night when we were talking. They hammered corn and beans down there saying cattle is going to be 129.5. I'll buy that. That's probably true. I don't think your cattle herd's going to increase near as fast as a lot of people think it's going to increase. I just don't see it happening. So I think we're going to have tight supplies. The fear is demand, obviously, on the cattle side of things. Are we going to get the demand domestically and from exports? We're going to have to keep our eye on that. Food CPI to rise. Another one of the Brainiac numbers, the CPI numbers. So that's what it is. Net cash income projected to fall in 2013 but remain high. not a big fan of these cash income statements that they make. I think it varies from everyone. So, shit, I got guys that may be losing money in the dairy, getting hammered, and other guys that are making good money. So, I don't give those much weight. Projected to fall for most crop producers. There, you're looking at corn. Look at 2013 is right there. Your wheat and bean guys. Net cash income from livestock. They're saying it's going to decline. Big hit. Here you go with hogs getting hammered pretty good. Dairy guys, you're in trouble still. And that's it. I just kind of wanted to show you what they were talking about and what their view is. Let me get over here to what I want to show you. Let's see what we got. Where I think prices are headed. Let's just go through it. Continue to tell you this, money flow is king. I know everyone that reads the report and buys into some of the things I've been telling you is, I don't believe in the fundamental analysis drives the traders. I don't believe technical analysis. I work for some of the best technicians in the world. I was a technician at one time. Like I tell guys when I go out and talk, you know, every ship at the bottom of the ocean had a damn chart on it, so the shit didn't do them any good. I made money trading technicals, and I got my ass kicked trading technicals. Made money trading fundamentals, got my ass kicked trading fundamentals. Like I told you, my wife says I've got to be one of the smartest guys alive because I've had so many learning experiences, call them. I come home and was like, damn, I got my ass kicked. She's like, are you an idiot? And I said, oh, it's just a learning experience. I'm not going to do that again. She's like, shit, you got to be smart. I said, no, not really, I don't think. So money flow's king. And I tell these guys, I mean, we got to go where the herd's going. I love that line that Gretzky's dad told him. He always said he was his best coach. He said, Wayne, skate to where the puck's going to be, not to where the puck is at. He said it was his best advice ever. I think that's perfect for the farmers and perfect for our business because we tend to always be looking in the rearview mirror rather than looking forward. That's what happens a lot with why we can't make sales. I'll get into a lot of that too. A lot of that's psychological, and a lot of it's because we take it internally and we don't look at this as a business. We look at it more personal, like it's our baby or part of our family, which it is part of our family. And you kids that have inherited it, you don't want to screw it up because your old man worked hard to give it to you, and then you're trying to leave it to your kids. And it's a real tough decision on the marketing, so when it becomes personal, you guys tend to hesitate. And when you hesitate, you get a little scared, and then when you get scared, you can't pull the trigger and shit. Your worst nightmares become a reality. So I hate to say we got to take the emotion out of it because I'm an emotional guy and I do things with passion and fire, but you've got to try and check the emotion at the door when it comes to this marketing, and you got to look at it from a business standpoint and a business perspective because that's what it is. That's what it ultimately is and has to be treated that way. This rule right here, CFTC Rule 1.73, scheduled to be implemented June 1st, has some of these fund guys pissing their pants, period. They're nervous. One of the big ones is because the clearing firms are going to have to put up a ton more money. Like I said here, fear causes traders to reduce risk and seek security, and it will reduce money flow. Commodity funds, the big thing with that is the clearing firms are going to supposedly have to put up double, triple the amount of money to secure what's being on the books. So like an MF Global situation couldn't happen or the deal with Peregrine. So whatever margin money you guys put in, see what usually happened, I told the guys sitting back at the table, you guys have put in $100,000 for margin count. Well, with that $100,000, you think that you need, say, $3,000 for every corn contract for margin. Well, as a clearing firm, we don't need $3,000 as margin. We just need a little smidge that we put over with the exchange because we owned a lot of seats, and we just put that little baby amount of money up. But with your money that's sitting there, we trade that money and try and make money off of your money. So when they said they didn't do that shit, I don't believe it because that's how we made money. And we made interest off your money. That's called the float. So clearing firms right now are making zero interest off of your money because there is no interest to be paid. So the only way they can make money is they got to get a little bit creative in how they maneuver and trade your money or what they do with your money as it sits there. So if you put up, say, you think you've got $50,000 in margin call as the clearing firm may only have $5,000 in margin that they have to put up with the with the exchange, or however it may be. With the additional funds, they invest it or try and do something with it to earn money on that. That's how they stay alive. We had prop traders, proprietary traders, trade the house's money. When those guys crashed and burned, that would be a problem. And when 2, 3, or 4 of them crash and burn big, like you saw J.P. Morgan say the whale smoked them on those trades, on that one, they lost all that money. The worry was, you pissed through enough money, there isn't enough money to give back to the customer, which is what happened with MF Global and those types of scenarios. When that plays out, people start losing confidence in the market. So the CFTC comes in and says, shit, here's the deal. You guys aren't going to do that anymore. We're going to make you put up a whole bunch of money. You can't, instead of you only putting up a little bit, you're going to put up a lot. And then you can't use those people's money. Well, clearing firm says, that's fine, do that shit. Well, then we're raising the fees and the prices of poker to everyone that's playing, or we'll be out of business. So they're just going to take and increase your margins and increase everything on your end, and Grisafi and all my buddies in Chicago, and increase their end. Now, what do you think they're going to do? Out. Volume's going down. They'll be out. They won't like it. They won't be able to make money. They can't make money doing that. Grisafi's trading at probably a quarter a trade. He's probably trading 25 cents or something. I mean, he can't go in there and start busting trades in and out all day long at higher prices. So those guys will be out. Money flow will be reduced. That's an issue. That's supposed to go into effect. It's already passed. They're saying they're going to boycott it and do some things. We'll see what happens. Commodity funds are losing ground to better performing equity funds. Guys, come on, let's be realistic here. When the stock market was rallying its ass off in the early, into the 90s and 2000s, where were we at? It's real hard to attract money into commodities when the stocks are returning 15%. We returned 15% in the S&P 500 last year. Who wants to put money in commodities at risk? At risk now, I mean, you're talking serious risk in commodities more so than stocks. If you can earn 15%, the average hedge fund last year, I think, lost money. I mean, these guys are returning 2, 3% in stock market. S&P 500, you can just invest in a mutual fund that trades the S&P 500, and you're making 15%. So if that continues, more money heading out and more ripple effects. Because remember, most all the funds, I should say the fund money is primarily long. Make sure you understand that. Large banks looking for a way out of agricultural speculation rather than ways to put more investment dollars at risk. Was not the case last year. Was not the case the year before, 2 years before, or all the way back to 2005. That was not the case. These were not the headlines. You can see the headlines right here. France's #1 listed bank suspends ag trading. German's second biggest bank announced that it's pulling out of agricultural commodities, ceasing to offer investment vehicles to customers. Barclays, just the other day, stopped all speculative trading in agriculture. Investors have withdrawn $10 billion for commodity index funds in the last year. That's not good for us. That's the horsepower that drives prices and pushes the rock up the hill. I use the analogy, and some of you probably already heard it. If we have a big boulder here, and we're rolling it along level ground, let's say that's $4, and we're pushing it along here. We don't need a whole lot of horsepower to push the rock around at $4. Prices start to increase, we start to go up a hill. We're going to need a couple more guys in. These guys I'm going to call our funds, or big, heavy players. We get to $4.50, $5, we need a few more guys in. We push the rock. We get the hill all the way up to $8, $8.50 like you guys have seen. We need a whole shitload of guys in. We need all the funds to be excited about what's taking place in these markets. We need all the horsepower and manpower we can get. So a lot of guys said, how did you make that sale like 8:30 and say that we needed to probably be getting out of a lot of that stuff? And I said, well, shit, there was 500 and some thousand contracts long, the funds. That's about their max. And that just simply means when all the bullish money has come into the door, into the room, and we're all pushing the rock up the hill, and the hill's getting steeper and steeper, there's only one thing that can happen. A couple of guys take profits and get out, or they get tired and move to the sideline. Holy shit, here comes the rock. And back down the hill we come. And it always generally comes down way faster than it goes up a lot of times. That's why you get a lot of your big prop traders in commodities are short guys. They're always short. And that's where they make fortunes, on the short side. So you have a lot of guys that make big money. They're sellers that really just love to short the hell out of the markets, and that's where they try and capture the big gains. Now, they've gotten killed as of late because the markets and the commodity markets have had one hell of a run. The guy at Citibank, he's saying the commodity bull cycle or 9-year bull cycle is over. Kaput, this is it. And he's a smart guy. I don't think it's over with, but I do think we really have to watch that money flow situation better. And when we get steep up the hill, and we know we've loaded about every bull in the room that's going to help us push prices, then we got to make sales. I mean, we have to make sales at those points. And we cannot hesitate. We can't get emotional. We can't say in June that we're going to make sales at $7, and then we get to 7, and it's like, we're going to 8. We'll make them at 8. And then we get to 8, shit, we'll wait till 10. I would be hesitant doing that, guys. You got to get out of that habit. These markets aren't like that anymore. We used to move 30, 40 cents in a year. I remember a couple of years we only moved 40 cents the entire year. The entire range for the entire year, 40 cents. So that's not the case. Tommy just said, shit, we moved 50, 60 cents today in beans. Today. So we got to be paying attention. This here is track and manage money. This is like information we get all the time, statistics. I think I ran this in one of the reports. You can just see how that spike was. You can see the years. This is when the banks started coming in. There was some pretty heavy money flow coming in. You see how the money flow, when we get short, it's not a real extended period of time. They like to be long. They like to be bullish. A bullish story is real easy to sell. Everybody gets excited about being bullish. Bearish story is kind of a pain in the ass. It takes a lot of explaining to do. What do you mean getting short? I don't know how to get short. I don't know. What are we doing? That's complicated. Most of them are all longs, and you can see, look what's happened to money flow. Boom. I mean, we're back, just clear back to even almost. So I think this is an important tool. We have to continue to do a better job of tracking it. I tell guys, can we tune that in a little better or not? This is funny. I always like telling the story just to let you guys know what you're up against. These guys here, I don't think you can see it, can you? This here, right here, this X, that's the Carrier Hotel, New York City. These guys in green, hedge funds. These guys in green, hedge funds. I was on a bunch of calls. I've been on call, last year and a half. I just had the conversation about what's taking place in Kansas City, too. I'll let you in on that one. These guys here wanting me to go in with them and buy buildings around the Carrier Hotel. This is where all the copper comes in the United States for the internet. This is the daddy. This is where all shit's hardwired in. This whole building's full of it. All servers, wires, coppers, underground. Some guys from Chicago and New York spent, it was several billion piping a canal from underground cable from here to Chicago, direct route. These guys are pissed off because these guys are a 500th of a microsecond faster than them. So what's happened is I didn't buy any of this. That wasn't one of my smarter moves, see? I should have done it. These guys were buying up these buildings around this Carrier Hotel when they found out this was all going to be put in because they knew there'd be a run on this shit around this hotel so these guys could get faster service. I told some of you last year, like Tommy tracks, all these algo traders, I don't know if you guys understand what they say when they say the algorithms. They just hire guys that know nothing about trading, but about computers and basically about mathematical formulas and equations. They get on Twitter. I told you when I went back to Chicago last year, my buddy said he was printing money with these guys, building these algos. They look on Twitter or the other social media sites and build algorithms that track how many words per second come across Twitter, like the Tebow deal. He set the record, a year ago, and everyone else sets the record. Say corn, like I told you before, is 40 words a second. Well, when corn goes to 60 words a second, that triggers a signal to strangle the market or straddle it. When it doubles and goes to 80 words a second, then they exit the positions, bank their profits, and they're out. They do all this shit at a microsecond. That's what a microsecond's equal to. Now, 1 microsecond, to give you an idea, I should say, is less than a click of a mouse. And they're bitching over 500th of a microsecond. Now, you and I can't even get my screen open and get anything typed in, buy or sell, anywhere close to it, and the shit, they're out of the market. That's why when they extended those hours and they released the USDA report during hours, every traditional big trader went nuts, bitched a fit, wrote a letter to everyone they knew. They're trading the report before we can even get it read. I'll yell at guys in the office, I'm like, what the hell, what's the numbers? And I'm yelling at them, shit, the move's already happened, and back down before they get the report open. I mean, you guys have seen it. I mean, it's boom, boom. Well, I mean, what happens is they track the Twitter, they track it, and all of a sudden the word corn explodes, shit, we boom, boom, and we're up and down and we're back. This is what you're up against. This is where the market's changed. That's why Tommy said he was dead wrong. He was a proponent of the extended hours, like he told you. I was definitely against it. And Tommy knew that, and he saw what I was writing. It's just, when you widen and extend those hours, you create serious ripples and serious volatility, and these guys take huge advantage of that. And it makes it very, very difficult to maneuver in the market. So I just want you guys to know what you're up against and where this all is headed. And like Tommy said too, remember this, CME is a for-profit business. Who's the biggest traders that they have? Right here. This right here. High-frequency trading. You know right now that there's only, I want to say, they make up 2% of all the companies that trade on the stock exchange, and they do 75% of the business. They say a stock, average time and length of a stock's under 2 seconds. But it's held. 50% of the stocks are only held like 2 seconds. So they make up all the business. And when you get your statements in the mail on trading, you see that little exchange fee, whatever the amount is now, or the little extra fees. Well, think about it. You're trading 2, 3, 5, 10 lots. They're trading hundreds of thousands within seconds. So who's the exchange going to cater to? Obviously, guys, this is where we're headed. So this is what we got to be aware of, and this is, we got to try and take some initiative and some vision and see if we can't use that to our advantage. So I'm going to show you a few things that maybe will help. Current corn market fundamentals. South American production's the whole key right now. That's what we're trading. 70, 71, 72 million metric tons for Brazil. Argentina, the USDA is still at 27. I think that number's coming down. Like Drew said, there are some dry issues, but Argentina has improved as of late. I still think that number's a little high. I think they will be coming down. So I think the South American numbers are the highest they're going to be. Now, I want you guys to try and start thinking like this. That means they're going to have to probably maybe tick down. That means there might be some bullish cards come into the deck that we will have. That could prompt a little bit of a rally. If Alan's right and we can hold the 550 level or hold around in there, I just don't want the rally to come for 450. Maybe we drift a little bit, but I'm thinking, rather last year, those South American numbers started getting bigger. Remember, they were smaller, and then they got rains late, and they kind of grew on us. I think they peaked, and I think they're going to maybe start to come back down a little bit. So we might have a little reversal there. Not much because, you do have some guys, though, that are throwing out some fairly low numbers. There's guys sub 20 or right at 20 million metric tons. I don't think they're right. I think we're probably 25, 26. And like Drew said, I don't think there's a huge issue in the South American production. A lot will depend on that second crop corn. Keep your eye on second crop corn. Rains are in April to May, I believe, is that right, Drew? April, May? Brazil, second crop rains. That's kind of the key time. It's what traders look at. So the rainfall there will be pivotal. U.S. production, I'm more like at 97.5 million. I think that's probably about right. The USDA threw it at 96. This 143 yield number I'm talking about here, a lot of fun people are throwing that number around. If the yields fall 143 or higher, record crop. 143 lower, not a record crop. So we don't have to be 163 for it to be a record crop. That's what has the funds and some of the guys on the coast a little nervous. You go 143, still a record crop, and I'm telling you now, it's not going to be record demand. Demand's falling. So you're going to have record crop into falling demand. You tell me what prices are going to do. That's going to be a problem. That's a different scenario than the last 2 years. U.S. demand, here's why. Ethanol's down. You lost 500 million bushels in ethanol. Every other year we were gaining 500 million. That's a million bushel swing. Boom, right there. Feed usage, down. I'll give you some. Exports, sub 1 million. It's the worst we've been since 1970, I think. We haven't been sub 1 billion forever, and we're at 900 now, and there's talk that we could go to even 850 million. So when you've got the issue of this being a record crop followed by not so good demand, we've got some issues. I will agree that if prices get low enough, China will be a price buyer. I don't think there's any question. I think there's several countries that need to replenish their stock. I think they've seen what corn did. I think they've seen the explosiveness. I think that's got them a little scared. So I do think they will be aggressive buyers. The question is at what price and from who? They're going to buy from us? They're going to buy from South America? They're going to buy from Ukraine? The Achilles heel? We taught everyone how to farm. Now we've taught the people that traditionally do business with us how to source corn from other areas. I mean, it is what it is. It's unfortunate. We've become the backdrop of the world, or the safety net, I should say, as far as exports are concerned. This is with wheat. This happened, well, in wheat. We'll get to the wheat slide, but what was it? About 90% of Egypt's they're the world's biggest wheat buyer. They used to source about 90%, 85, 90% of their wheat from the United States. Now it's hardly any. I mean, it's minimal. So what everyone's done is they want to run to Walmart and Costco, or what I call the low-cost providers, the people that don't have the storage, and just dump it. And then whenever they get in a jam or they need a little quality, come race back to the U.S. That's the only time they come back, though. If the line's too long at Costco or Walmart, or the quality isn't quite what they want, then they'll go to the mom and pop, come back to here where we've had good success, traditional exporting. That becoming a backdrop has become a real issue and a real concern. Here's the funds corn supply talk. Write the numbers down. I kind of improvised them or changed them. I should say changed them a little bit from the last time we were out speaking as we moved it down a little. 90 million acres is probably what will be harvested. The USDA is saying, when they say to 88.9 or somewhere in there, I'd use easy numbers, 90 million. We'll probably plant 90. So they'll move that harvested. They'll move planted acres up. They'll move this up a touch. Here you are. I mean, it's all going to come down to yield. Let's just be realistic. You go somewhere in here, if let's say we're not the 160, we're down in this 150 range, you're still 13.5 billion bushels, you're probably $4 to $5 corn. I think we were trading closer to 142, 143, 145 type of yield when this drought story was more on fire. Listen, it's not about being right. Okay, the drought's still going on. Okay, the drought's great. The drought's going to happen again. If that's not what the funds want to trade, or that's not what they want to hear, that shit doesn't mean anything. It is not about being right. I can't get this through enough to the folks that sit here. It's not about being right personally. It's about making money and about being right where these markets are going. That's the key equation. Okay, I mean, you can tell me, oh shit, drought's going to stick around. Okay, great. You are saying that yourself, but the guys that are trading thousands and thousands of contracts are listening to a guy like Drew that comes out, tells them the drought's probably not going to be around those areas. So you can be right and broke, or you can, throw in your hat and try and get on board with what is being traded. That's all I want to try and get through to everyone. These guys think the drought's moving west, north and west. Everyone I talk to. Everybody I talk to says the drought's probably not going to hit Illinois and Iowa again, the big money. They say the drought's moving west and north, and that's their feeling on it. So we ought to listen to what they're trying to say in that context. Now, you're right. It might circle back, like he said, and some craziness happens. We can't be certain, and it pushes back in here. If that happens, and these guys are flat with money flow, I'm telling you right now, corn goes $10 plus. If they get squirreled that bad this year, if just like you said, Drew, if that drought hits and it's as bad or gets worse, I'm not sure you don't go to $12 corn. But you are going to blindside them with one they no way saw coming. And they're going to jump all over it. And they're flat. That means they've got a lot of dry powder. They will shoot like no tomorrow. They will fire off all guns, and we will race higher immediately. If it doesn't play out, they really want to hammer this new crop corn. I'll just tell you what it is. I mean, they want to hammer it. I'm talking to guys that say, man, you really think corn can go to $4.50, $4? I'm like, shit, that's optimistic. I'm like, what? There's guys talking $3.50 corn. And listen, don't have to be right this. Funds overdo it to the upside just like they overdo it to the downside. And what I'm telling you is, remember that chart I showed you on money flow? Don't freak out and panic and sell about 3 years out at the bottom end of this range. I mean, understand they're probably going to take the sinker deep, and then they'll probably come back. I think we're going to trade, like Matt Norman and I talked. I mean, I think this is more in a cyclical cycle type pattern. I think some guys in here, I know I've been in a construction business, and it's a bitch to know when to expand and when to contract. All of a sudden, you hire a bunch of guys on, you're doing a bunch of work and jobs, and then the jobs start drying, and you try like hell to keep your guys on, you go broke. I mean, all of a sudden, the world is in this position where demand's pushing higher, higher, higher. I agree, demand is going higher. The population's moving higher. Lower class people are moving into higher protein diets. The world demand is moving higher and higher and higher. Well, all of a sudden, everybody and their brother wants to be in farming. Boom, here we go. Agriculture moving higher. Production's moving higher. That balance and equilibrium gets out of whack. And I think it's going to get out of whack a lot for the next 20 years. So you're going to have to become almost wizards of when to expand, when to contract, when to expand, when to contract. I sat there at Top Producer and talked to one of the guys, and he said, I think if I went out there and just sold the shit out of that 2014 Dees 2014, when it was above 575, he said, I guarantee you within the next 3 years, that position is going to be highly profitable. Shit, I agree. He's like, I'll roll it if I have to. I mean, it's going to be highly profitable. It might not be in the next 3 months, 6 months, but at some point in time, that 2014 at 575, I'll break it. We're going to get overextended one way and overextended back the other. And you guys have to have more of that mentality. We've never seen an industry, whether it's in home building or whether it's in construction, where you have such massive demand, which we are having from the world. But when we have massive demand, we'll have those surges and pushes of money that come in and create all that up and down, where we get production slightly ahead of demand. And then we'll have to weed out the guys that get overextended, the guys that were never home builders that just thought they were chasing fast money. We got those in the agricultural world. That's what we're seeing. That's why prices are getting bid up on all this rent and everything. Everyone wants to be in agriculture. Well, we'll run it up, and then we'll get there, and we'll knock a few of those people back out, and now all of a sudden production will fall back down below demand, and all of a sudden prices are going to run again. So just make sure you're preparing yourself to hunker down. You go 170, I mean, shit, we're in deep trouble. I don't think it's possible, but there's guys out there that'll say we haven't seen the full abilities of the triple stack or some of the new genetics, and that there's these possibilities that we could have an explosive year in the next I'm looking at the next 2 to 3 years. If that were to play out, we may have some issues on our hands just because we don't see demand really jumping super hard here right in this time frame. Without another major weather story, I should say. If China gets zapped with some massive, crazy floods or droughts, certainly there could be something that comes in that could be an issue. Demand talk, food, seed, and industrial use, 5.86 billion bushels. I think the number moves higher to around 6.2. I think we're going higher. I think ethanol is moving higher. Corn use for ethanol, 4.5 billion bushels. I believe this number is going to move to 4.8. That's probably optimistic. I hope. I got a couple ethanol plants, partners in. I want to be optimistic ethanol. So I'm going to use those numbers. Understand that the ethanol numbers are, some guys have asked me that. Food, seed, and industrial use, they break that ethanol out of there. It's in that number right there. So when you see that on an S&D chart, that's ethanol is actually in that number. They just busted out. Feed usage, 4.45 billion. I think the number moves higher. I think you go to 5 billion. Keep in mind now, the USDA just added 300,000 back in Jan. So 300 million. I don't think they wanted to do it again. So a lot of guys were looking for them to jump that higher this last report. I think they do it maybe March, April, somewhere in there. That could be another bullish little card. They throw us a bone right here or something. You get another little pop. It could give us another little bit of a rally, and look for that as an opportunity, maybe make some more sales. I doubt you get them to raise this ethanol number anytime soon. That's probably a little more than the extended. I don't think they're going to lower it, though. I think we're going to stay right around there. Exports, this is a little bit possibly a bearish card. We're already down to 900 million bushels. I'm talking this next go-around. I think they could bump that down to 850, but eventually as we move into 13 or 14, I think that moves back to 1.4 billion. But the kicker is, we really don't want that sumbitch to go higher, because if it goes higher, that probably means prices were way down and China stepped in as a buyer. So I'm probably saying that prices drift lower on us, and then China comes in as a pretty good buyer, like they did today and bought new crop, a little bit of new crop. And this number moves higher, but it would only be because prices were actually getting to a price level where some of these countries wanted to come back to the U.S. Total demand, 11.267 billion bushels. I think the number goes higher. I think demand goes to 12.6 billion. 12.6 billion. What did the USDA say we were going to produce? 14.5 billion. That shit don't pencil. We're swimming in corn. That's a problem. Here you go. Look at this chart, guys. Ethanol and exports. Look what we were doing here with ethanol. Boom, 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 like I showed you. And all of a sudden we're back. Look at exports. Wow. I mean, it's just steadily not a good scene. And like I said, the only way I think that really reverses or changes, I don't think South America is going to really puke on the corn side of things at all. Soybeans are volatile, but corn, we have full season, second crop, and hell, the weather's fairly decent, a lot of good water and precip, and it seems decent. I don't know anything pushes that number higher, except when China starts to get a little more aggressive into this thing, but I think a lot of their buying is going to be sourced from South America. It's going to be sourced from Ukraine, some of those other countries. So this number will start to work itself higher, but unfortunately it'll probably be due to cheaper prices. Cattle inventory. Tough to feed a lot of corn. I mean, look at cattle inventory. Not pretty by any means. And I don't think cattle are going to, people say, well, we get down to $4 or $4.50, cattle are going to, we're going to really increase. I don't think we're going to really increase a ton. It's going to take a little while. Hogs and poultry is already about max. You could add a little bit in hogs. The hog numbers will push things higher. So I think feed usage could go higher, but it's going to be tough. Like I said, corn summary, I just want to make sure we understand. Trading in more of a cyclical fashion moving forward. As population demand expansion within industry shake themselves, I think we're going to see extreme highs and extreme lows, and we got to be prepared for the extremes. That's the kicker here. $17 beans, guys. Pull the trigger. You got to pull the trigger. I'm telling you, I'm kicking myself in the ass this whole last year. Not getting more oversold. I think I got to recant that getting oversold. When we're at the high end of these ranges, I think we got to make sales. Regardless, we have to make sales. I mean, we can buy back out them, we can roll them. We've seen guys, we can roll them if we have to roll. We can do some things, but when we get up into $16, $17, $8 plus, and I know it's easy to sit here and say that now, hindsight, but we got to make sales at the upper end of the ranges. And I know you look out your backyard and tell me, you're going to make 5 bushel beans, and then 30 days later, you tell me, shit, 45, 50 bushel beans. I understand that. I understand what you're saying there, but I just think we're going to have to be more aggressive on the upper end of this thing. And if we get a little oversold at the upper end, well, we're going to have to take those chances. Expect extreme low in the next 3 years. I'm not going to say this year. I don't know, this drought thing, like Drew said, it might play out a little bit. We may do 140 yield. We go 140, 145 yield, which I think could happen considering the acreage that's coming online and things like that. We stay in the $5 to $7 range. I mean, if we're in the 140-ish type yields. Those yields kick up above there into the 150s. I'm not thinking it's going to be real promising. So a lot of guys this year, like we said, with your insurance locked in at a good level, not that big a fear, but you get out there where next year's 14 insurance is locked in, like some of the guys said, below 485, 450 range, and you go 80, 85%, you're down there you're in some problems. So it's 14 that to me is a little bit fearful the way things are setting up. I think there'll be a period where production slingshots past demand. And I don't know if it happens this year or it happens next year, but just like I said, within like the building industry or construction, you always get those. That is natural function of markets when demand is expanding as fast as it is. That's what happens. Businesses come on board and everyone oversaturated, and then it drops back and you oversaturate. I think that'll be the theory moving forward. This is what I was telling you. Know the ranges. Know how many bulls got to come in this thing. Know how many bulls we can get in here to push the rock and how much firepower and horsepower we have to push the rock higher. When we get up here in these upper ends, we got to be aggressive. Down here, we cannot afford to be aggressive. This is where guys got in trouble back in 2009, following some people. I won't name who they were following, but shit, guys sold three years out, right in here, 350 range. Sky is falling. Corn's going to go down and stay down here for years and years and years. I think those days are gone. Those days are gone. It's going to be about staying power and about being able to market in the upper end of these ranges and taking advantage of them and then socking away some acorns and living to play another day once we pull back out of these ranges. As you can see, that right there lasted, what did we last? 2 years almost, year and a half. I think those are the types of cycles you're going to see. Remember how cattle's always traded in cycles like that? I mean, I think this ag, the corn and beans are going to be shorter cycles and bigger pops and more extreme. So what's painful is, it's always darkest before dawn, and when they break this thing, boy, everybody and their brother will be out there bearish as can be and talking every bearish thing you can think of. And that's when you guys really get down on yourselves and you tend to just get overly scared and freak out. And I'd be patient down in there. Just if you let it get drift on you, we just got to be really patient. So, that's what I have there. Wheat. Let's talk wheat real quick for some folks. I had Emily pop me up some slides on wheat. I don't know anybody that's really a better wheat trader. You guys heard Emily talk last year. She did a great job with a few accounts on the spec side. I mean, she took some guys, she made them some small fortunes on a little amount of money. It's a great, great wheat trader. She advises some of the biggest wheat people in the industry. So I'm going to show you. I wanted to make sure. That's what I tried to bring in today. I tried to bring in some weather guys and some technical guys and things. So you don't just have my perspective. You have other people's perspective as well. Market changing, continuing volatility, increasing supplies is transferred to the Black Sea, Australia, Canada. Demand growth engines of the past decade may be starting to slow. Sounds similar. Increased competition for world feed demand in the next few years. Food flour demand is largely stagnant. Here's what we got. Look at this. Welcome back India to the world wheat export grid. You guys remember, India was out of the game. All of a sudden, India's back in full blown. They're going to have another year of close to record production. They're talking that their government, this is an interesting one. I wrote this a while back. Their government surplus in stocks now about 3 times what they had intended it to be. Remember they had the issues where they were almost, let me see the next slide. No, that ain't it, but I'll show you in a second. They're going to produce about 93 to 94 million metric tons. That may be a hair high right there. But now that they're 3 times oversupplied, they're starting to release a lot more grain. And they just said, we got to get rid of this. We got to try and make some money here and move some of this grain. That right there has caused some definite concerns. Record wheat production results in burdensome supplies. I think you guys can see this, where they're going here. Indian wheat stocks, nearing record highs. Look at this. Here's India. Here they are with their wheat exports. And what happened? We were sailing. We were moving along, chugging. Wheat was the leader here, back here. Now all of a sudden, look at this. Holy shit. We're in trouble. As far as India is concerned, coming back on the map. And they are cheap wheat. We actually sourced some wheat this week. We won a tender that was cheaper than India. $297, I think we were at, and India was like at $305. So we got to pay attention to this. So India's coming back online. Russia's coming back online. That's why I was asking Drew if he's hearing anything significant. In the years we had the big run-up, I mean, Russia got crushed. India was out of the game. Now here we are. India's coming back full circle. Russia and Ukraine look like their production's amping back up. The weather's kind of subsided. And so here we are. Canada wheat exports, I think you can see here. Canadian wheat exports will be increasing. One of the key influences for U.S. mid-high protein. I think, once again, remember the year Canada, I don't know what year was it, Drew, that Canada kind of got wiped out. Right. One of them was significant. It happened the same time Russia, remember? 2010 created the big explosion. I'm not sure. I know there's some issues and there's some dry situations and things, but it looks as if Canada's going to come back like gangbusters. Australian production trends back to the 10-year average. So here we go a little bit with Australia trying to get back in the game to some degree. This wheat production number at 22 million metric tons, probably about right where it needs to be. Competitive offers, I think, that's what we're saying. Similar type of scenario in corn. we're getting more competition from some of these global sources, and that's become the real issue. Black Sea will be back in 13-14. Black Sea, you know, we're talking into the Ukraine areas and things of that nature. And I don't think there's really no debating it. I mean, they're coming back in a big, bad way. Ukraine's corn, new crop was $75 a ton cheaper than U.S. Shit, in the last several weeks, couple months. So Ukraine's becoming an issue that we're going to have to pay attention to. Overall, world ending stocks, ample, adequate, no issues there currently, so to speak, with wheat. I think here you are. You see this stocks to use ratios, all fairly good. So we believe wheat's going to be a follower of corn. I don't think there's any question. Here's the one I wanted you to see. This is what Emily says. These things play out and forecast the range of wheat values in late third quarter and fourth quarter 2013, $4.25 to $5. Wheat. Now understand, she's advising some of the biggest funds in the world. So this is the info these guys are looking at. That's how they're setting their positions up and how they're trading. So if wheat's at that price, corn could be in trouble, guys. And I just believe wheat's going to continue to stay. You can take it almost to the bank lately. Every time wheat gets $2 above corn, what happens? Right back down. We go to about a 70-cent premium over corn, factors back into the feed rations, and all of a sudden, wheat starts to gain again. So it's almost just like clockwork, and people some of these fund guys have been printing money off of it. The back end of wheat's got a huge carry. There's a carry in wheat. There's an inverse in corn. We just made, what was it? We bought, what did we do? We were long Deese corn, short May wheat at $2.80. Thing came in $1. We picked up $1 on that position. Now, those are spec type positions, so a lot of guys we don't put those in, or do those for people, or a lot of guys don't trade those because they're hedge onlys. But you know, there's a ton of money to be made, guys that are shorting the back end of wheat because of the carry, and thinking that the only real demand in wheat has come in the form of feed rations, not in human consumption, so to speak. So it's the feed rations as an alternative to corn that helps wheat. So with wheat trading in the back end at high inflated prices, and you got an inverse on the corn side of things, that it's been the game that they've liked to play. Soybeans, it's all about South America right now. 82.5, Argentina at 54. There's guys out there saying, you know, the USDA's got them 53. I think there's guys out there talking right now we could be below 50. There's some folks, Landworth, I think, threw out a 49.6, 49.5 estimate. Any way you slice it, South America's probably going to produce 30 million metric tons more beans, maybe 35. Who knows when it's all said and done. U.S. production, 77, 78 million. Yield, like I said, the guys are going to say 44. Big issue is we had the worst drought we've ever had, basically in modern times, and you guys still rolled out close to 40 bushel yields. So with that being said, I think the funds are fearful that you're going to kick out a 44 bushel yield number on them, or 45 maybe. And that's going to pop us over the magic number. You know, we're going to be above, our carry is going to be probably above 250. There's some guys talking to be 300. And the issue is this. Understand this is a big one, take home. Get the beans, you better get the beans marketed a little earlier than normal, because we're having the harvest is behind in South America and Brazil. The logistical issues are becoming a problem and a concern. The bushels are not disappearing. The beans aren't going anywhere. They're just not getting out of the country in a timely fashion. South America traditionally will export beans and be the export leader for the world between Feb and Sep. U.S. doesn't really do much, hardly do any business. Let's say this gets pushed back, because we usually are the winners from Oct to Jan, a little past Jan into Feb. If South America starts getting pushed back, they're going to run into our time frame and our time span. That's when you're harvesting beans. Where our export number is going to be in the tank, probably third quarter, fourth quarter of this next year. If that happens, you either better be prepared to store for a while, or you probably better get them marketed a little earlier than normal, would be my guess, and would be what I would tell you to do. Because there's some guys out there that say, this gets pushed back far enough, and China demand just kind of stays stagnant around where it is. They could actually run through our entire season and be exporting beans again off their new crop in 14, basically giving us that much of a window to export beans. Now, if we go 250 million, 300 million in ending stocks and we don't get a chance to export beans hardly at all, shit, that number will bump up to, there's guys talking you could be 400 million ending stocks. 400 million, you're sub $9. I'm not saying we're going to stay there, but you could see people hit the panic button and push us there. China's demand, they got right now penciled in at 63 million metric tons. A lot of the fun guys think that might be a hair high. We might be more like 61, 62. They're steadily progressing on the demand. We don't know if there's going to be any huge explosions between now and 100 million metric tons. Probably just steady Eddie. The production side may be where the explosions are. Biggest concerns, obviously, logistics, policy-driven biodiesel program. Everyone's saying that this biodiesel program is going to spark a lot of, oil demand. I'm not really sure that's going to happen. I think it's going to be more, we're going to just have to see what happens in Washington moving forward. I think guys with old crop beans, you're probably going to want to, I would be holding right here. I think if you still got them, you're obviously gamblers. Shit, you're wanting to roll the bones. So I think you hold and see what happens with the strikes. If we get, today was a big day. Today was important. I wrote today, if we could close above $15, that would be a very big day, and I think you could have got $16. This squirrely closed back down 20, 30 higher, and then they'll call that a key reversal. A lot of the technicians, a lot of the funds will try and sell it. They'll try to hammer it a little bit on that. The tech traders, anyway. They won't like the way that thing closed, like Grisapi said, so be a little cautious there. I know some guys are holding out for 16s, I'm not so sure, but I think if you've held till now, you got to go ahead and play the game out and see where we end up. Steps to improving your marketing. Obviously, you got to be better at predicting market direction. I'm not telling you anything you don't know. Fundamentals, money flow, look at the technicals, listen to the weather. All the people I've had you presented here in front of you today, I think you have to take that information into account every time you're trying to make some decisions. Build a blueprint for success. Predetermine your sales units, put the things in writing, make it more of a business plan, not an emotional roller coaster. You got to try and take the personal side out of it, and you have to execute, guys. Good risk managers focus on profitability, not simply the ability to predict overall market direction. So many guys get caught up in trying to predict overall market direction and being right. Hang up the being right shit. It's like Tommy said. He's wrong a lot of times. I'm wrong a lot of times. You got to check that at the door. I mean, we got to try and make money. It's all about making money, and this is what unfortunately, that's what it boils down to on this side of it. From the marketing perspective, that is our goal on marketing. It's not to be right, it's to make money. Another question I get all the time, farmland bubbles. We in a farmland bubble. Shit, top producer, man, those guys are saying we're in the biggest bubble ever. I don't think so. I don't think we are. I think we got to look at a few things. 52% rise from some of the top states this last year since 2010. Matches the fastest gain of the 70s, from the 70s boom. 30% gain in 2012 in irrigated. I think you guys have probably seen these numbers. Kansas was 33%. They exploded. Cash rents on irrigated are up 20%. Non-irrigated up 15% for the year. 74% of farmland now purchased by farmers. Kind of a little shift. Funds kind of backed down a little bit. Farmers kind of taken over and bought more ground. 43% of bankers telling Chicago Fed they expect higher levels of land purchases this year than in 2012. Pretty important. Momentum rising farmland values still exist. The reason I say it's not a bubble, we go into it several times. I've shown you guys the farm direction, that land price index I have. For some of you that hadn't seen it, real quick, unlike the NASDAQ bubble or the housing bubble, farm ground produces something. I had a guy out in Washington tell me, he showed me some documents. His grandparents bought their land, he had farmed 4,000 acres, bought their land with gold that they had mined from out there. Actually went and turned it in, showed them his certificates and all this. And he said they always like to compare the price of gold to the price of his land and want to know how they did. He said it was the single smartest move his family in their line of lineage had ever done, was trade in the gold for the land. He's like, even if you took the price that they'd sold the gold for, which wasn't anything at the time, compared it to the price of the land, they were somewhat similar in value. But when you add in the cash flow that the ground had produced for those families through the years, there was no comparison. The land produced shitloads more than the gold. right here, this is why I don't say it's a bubble. If you go 91 bushel yield at 310, this is your number. Come on out here to 05, go 145 at 236. We're still going higher. Look at your yields at 390. You know, we're still moving higher. You go out here to 2012, a 122 yield, but at $7-8, we're still going higher. Guys, if, like I said, if Monsanto and the tech guys are right and we do 300 bushel yields, and some of the ground, a lot of ground's getting irrigated and things like that, 300 bushel yields at 4, 5, 6, we're still higher, significantly higher. The ground has value. The funds see the cash flow in it. The annual cash flow, their objective is simple. They want a 20, 30-year return on their money. They're going to say this: I go buy Randy's land, I outbid Randy, $21,900, Randy, an acre. I might be nuts, but I'm hoping in 30 years, I've shown a 5 to 7% return on my money annually over time, that value is appreciated, and a little bonus money for me as the fund manager, the teachers union, credit union, whoever's invested with me. We're going to get a little revenue every now and then. I'm going to crop share with Randy's son, Nate. Say, Nate, I'm going to let you farm this thing, 50-50 crop share. I know guys in this room that are starting to do this with them. Some years I may make some money, some years I may not. But it's going to add on to my revenue. And in the end, it's going to level out my yield curve, and I'm going to have a decent yield. That's what they're looking at. That's what they're trying to make happen. The other reason I don't believe we're in a bubble is this: current land market mentality. Follow me here. I was in Chicago. The guy threw up the slide on top producer and said, we're in a bubble because everybody's wildly bullish. This is one of his main cruxes. I'm like, shit, I talk all over the country, and I don't know anybody that's wildly bullish. I said, everyone I go talk to, every farmer out there says, whew, what's going to happen to these land prices? They're crazy. Shit, that's crazy. I'm not going to buy any of that. You know, everyone's saying they're going to sit on their money and wait for a break. Well, shit, I've done that plenty of times in the stock market. That didn't work out so swell sometimes. I mean, everybody I go to, no one says, man, I'm buying everything inside. I'm buying everything I can find. I don't hear that from anyone. So I don't see anybody that's wildly bullish. Shit, I think most people are bearish. They all think the sky's going to fall and the shit's going to go back to $5,000 an acre for the ones that were at 20. So farmers, and this is everyone, this is investors. You guys are traders. I'd say everyone is. You guys are more traders than we are. Like Tommy, he's talking 5, 10 contracts. Hell, I know some guys in the audience that are swinging 50 to 100 contracts. I mean, you guys are bigger traders than a lot of people, and you actually have the bushels. But your mentality is a little skewed for a little bit. Farmers are more concerned about avoiding losses rather than obtaining gains. This is a little bit of an issue with traders. You know, I used to have to work with a lot of proprietary traders and trying to analyze their returns and if they were going to be successful for the firm or not. Simple test. You're guaranteed $3,000, 100% guarantee. Or I say I'll give you $4,000, 80% probability that you get it, 20% chance of losing. 80% of people take A. Wrong answer. 4,000 times 80 gives you an expected value of probability $3,200. But everyone's mentality is to try and take the sure thing. Everyone's scared to take much risk on in that front. It's what makes it a little bit difficult to be buyers of things. You know, like the theoretical value is actually lower on A than it would be on B. And it's a big mistake for most of us. Here's why. I love telling this story. This is a beaut right here. This is one of my learning curves, learning experiences. Here, I'll go back. May of 97, that bad boy opens up as an IPO. All right down in here. See that price? Basically about nada. My buddy's trading at the CBOE. He was trading for he was market maker for WorldCom. WorldCom went out, as Mark could tell you. Mark lost some money trading WorldCom. Some other guys in the room, I'm sure. And my buddy Joe was pissed. He's worked on the floor. WorldCom was a big stock, and he was market maker. He was making fortunes. He said, I got this bullshit. They reassigned me this stock. I don't know what the hell I'm going to do with it. It's probably going to be a joke. I'll be off the floor. I'm going to make no money, and all this song and dance. I'm sitting in my office, and this thing comes out in May of right about there, probably within 5, 6 days, 7 days after it comes out. Joe calls me up. Says, hey, man, I need a favor. I got a big issue. What? He's like, man, I had about 200,000 lot air in one of the trades. And And I said, are you kidding me? And he says, no, had a big error, and you got to move some over to one of your accounts. I can't cover it all. And I'm like, you gosh damn, Joe, come on now. I said, yeah. He's like, no, don't worry about it. Don't worry about it. If it goes against you, I'll cover you. Don't worry. No big deal. He's like, if you want to keep it, just keep it. If it runs and it takes off. He's like, a bunch of these Japanese traders say it's going to be a really good thing. I'm like, yeah, Joe, these good things of yours never work out. So I said, all right. He puts 50,000 shares over, 40,000 shares over into my account. This thing trades around a minute. You can't see. There's some blips in there. You can't really tell. But it goes down. It comes out of the gates kind of steady, and then it goes down. And I get a margin call on it. I put up money. More money in my account. I called Joe. I'm like, Joe, you got to bust that. You got to figure out how to unwind this trade and get out of this shit. Oh, I'm doing, man. I got a couple customers. I'm talking to them. I'm going to get this taken care of. A few more days go by. More margin call. More money. More. I'm like, Joe, come on, man. All of a sudden, it turns around. Starts to go up. Margin call. I'm fine. Make the margin call. I've got a little bit of baby profit in it. I'm like, John, just getting out of this damn thing. I just don't even want to jack with you anymore on this whole deal. Okay, do whatever you want, man. Do whatever you want. I don't care what you do. April 27th of 98, they split 2 for 1. November, split 3 for 1. All of a sudden, my one unit would have been 12 units. I showed Michelle this the other night when I was putting it together in bed. I just want to puke. 30,000 share error would have been 360,000 shares. Would have been 95 mil. 95 million bucks. Man, I am a candy-ass idiot, ain't I? That is not good. That's a bad deal. All over that right there. The stock's Amazon, by the way. Joe became the guy. He was a market maker. He didn't even know what the hell he was getting when he traded in on WorldCom, or when they nixed WorldCom off the exchange and brought it in. So, I was fearful. I didn't want to lose. I just wanted the sure thing, and I just was like, man, I just want out. I just want to be out of it. And then you know what? When I watched it, I sat in my office. Mark Criteria, some other guys we've traded with. And I watched it go up. Do you think I was going to be a buyer when I had it at like $1? You think I was going to be a buyer here? Nope. How about down here? Nope. I was pissed. Now I was just mad about it. I didn't buy it all the way back up. Never did. Never, still haven't bought any. Just bad taste in my mouth. So what I'm saying is, look what it did. There are people that told you it was in a bubble here. They tell you it's a bubble here, and here we keep going. Here's another good one. What do you think that is? What stock? Bingo, Apple. How many times could we have bought Apple? Holy shit, we could have bought it 1,000,000 times. I actually did buy it. I bought it on the break at right below 100. Got out of it about 150 and said I was going to get tricky and buy it back on the break, right? Went 200, didn't buy it. Went 250, didn't buy it. Went 3, didn't buy it. I think I bought some about right up in here. Get my ass kicked back down here. No, I've traded it in and out a little bit. But my point is, I know what the mentality you guys go through. You're not going to buy a ground you just saw 3 years ago go for $3,000. Now it's going for $5,000. And you could have bought it at 3. You could have bought it at 1. You're not going to do it. You're not going to do it. You're not going to do it. Well, a bubble isn't that way. Understand what a bubble is. What it takes to bust a bubble. More sellers than buyers. This is critically important for everyone. Commodities is a zero-sum game. Remember what I told you? For every buyer, there's a seller. Every seller, there's a buyer. It's not like stocks where everyone cheers on the same side for price to go higher, issue more shares. For every buyer, there's a seller. Here you go. Silver, the Hunt Brothers. I want to show you this. Make sure you understand this. This is critical for this land price thing, and it's critical, I think, for ag market moving forward. 79, the price of silver jumped from $6 to $48. Everyone probably remembers it. They were running ads all over the press and TVs, and you look back in the history books, and everyone was selling their silver. Selling. Key word there. Selling their silver. Hunt Brothers buying it up, tried to corner the market. Actually did corner the market. Hunt Brothers try and sell. Prices drop over 50% in just 4 short days. Hunt Brothers have to declare bankruptcy. Tom DeMark was their broker. Tom DeMark worked with me in Chicago. He said, I tell everyone, he said the Hunt Brothers, one of them said, Tom, call down the exchange and we want to sell silver. We want to sell some right here. $48 an ounce. They saw it printing on the screen, $48 an ounce. They want to be sellers, right at the high. They call down to the floor. Imagine we're in a pit. New York, small pit. A lot of guys know each other very well, family members. The order comes in, boom, they want to sell 1,000. Anything going away, selling, anything coming with your hands is buying. They want to sell 1,000. At the market, sell it. We look at each other in the pit and say there's 20 of us. Those pits in New York aren't very big. Not like the Eurodollar pit in Chicago. That some bitch is as big as a football field and tall. I mean, massive amount of people. But the pits in New York aren't that big. And we all know each other. Remember, we all know each other very, very well. So the order comes in to sell 1,000. What'd I tell you? For every seller, there has to be a what? Buyer. So I say I need to sell 1,000 at the market. I look, Randy, you a buyer? Randy said he ain't a buyer. Nate's a buyer. Chase, you a buyer? We're all buddies, remember? We're all related. A lot of us know each other. You a buyer, Scott? No buyer. So what do I got to do? I got to drop my bid. I got to drop my offer down. Now I'm at 9. Now I'm at 40. You know, we drop it incrementally. 48,750. Now I'm at 46. You guys buyers? No, nobody's buying. Phones aren't ringing. I mean, MF Global, Man, RJO, anyone. Nobody's got buyers. No one's wanting to buy. So what happens to price? It just keeps going. I keep asking. Anybody at 47? Anybody at 46? Anybody at 45? No buyers in the pit. Phones aren't ringing. No one wants the silver. Everyone was on the sell side. We lock limit down. No call comes back to the Hunt brothers. DeMarc calls the floor and says, "Where'd we get filled?" And he said, "Shit, you didn't get filled." And he's like, "What?" He's like, "You only got a few orders off early, and then all the paper dried up. There were no buyers." Oh, shit. So DeMarc tells the Hunt brothers, and they said, "What do you mean? We're looking at the price right on the board. What are you talking about? That's where we wanted to sell at." Now they're seeing a 44 print or 45, limit down, market, we can't trade, limit down. They said, "Well, how can that be possible? We saw it. It was right there. Who's crooking us?" No one. There was no buyers. So we proceed to go limit down 4 days. We open up the next day. This is how they used to open up the belly pit. Bellies, they said the only market that made grown man cry. And I watched it break some powerful people in pork bellies. Thank God they quit trading those son of bitches. Those killed me a lot of times. But they'd open up for days, limit down, days. And you'd just see the pit open and any offers, limit down, limit down, limit down, limit down. And that's what happened in silver. You had no buyers. Bubble burst. NASDAQ. Did you have any buyers? No buyers. Did you have any in the housing bubble when the bubble burst? No, everybody was already in. Everybody and their brother had bought a house. Guys that couldn't afford to buy houses bought houses. So there was no one on the opposite side. Let me ask you a question. How many of you guys out there are sitting there waiting to buy land on the break? Everyone, every single guy in here that I talk to, all the way across the country. Everybody's waiting to buy land on the break. Yeah, I'm waiting to buy Amazon on the break too. I'm waiting to buy Apple on the break, and shit, I'm still waiting. So I'm letting you know, I'm not saying prices aren't going to go down. Certainly, if we go $4 corn, you're going to shake some people out of the tree, and you're going to get a little break and a little setback. You better be pretty quick on the trigger, I would assume. I don't think we're going to bust. I don't think it's a bubble. I think you're going to have some blips, but I think we're going to trend higher. I really, truly think we're trending higher. It just doesn't seem to be any of the typical setups of traditional bubbles. Remember the buyer-seller combination? The funds, let me put it this way. I like to see that farmers are more of the buyers now than the funds. The only thing that'll shake the funds out of this deal, remember, they're long-term in this thing. They're trying to be long-term. If interest rates go higher and they can start earning 7, let's say anywhere from 6 to 10% on money in an easier fashion that's more liquid, they will get out of this land. They will get out of farmland. Then you can be a buyer at that point. But that'll take interest rates moving significantly higher. Interest rates move higher, then we're going to have a world of other issues as well. So, and you'd be earning a lot more in the bank. So I think you got to be careful. That'd be the only reason the funds will get out, because most of these funds are pension fund type players, and they're long-term type goal-oriented. So Unless you get that interest rate way back up there where they can make it fairly easily, I don't see them shaking out. And I definitely don't see the farmers shaking out. A lot of these guys have gotten one shot to buy ground that's located right by their house. One shot in a lifetime. A lifetime. This isn't like you can buy and sell it anytime you want like stocks. I mean, this was their one shot to get that piece of ground right across from them. I doubt they're going to shake loose of it. Unless they're forced to shake loose of it, which that would be the only reason. So I don't foresee it being a bubble situation. Favorite long-term play, and I'll wrap up here, for farmers. I think I said this to some of the guys when I went out and talked. I think the U.S. energy boom, this crude oil thing's a big deal. I think this is a smart thing for farmers to look at too. Most everyone, like they said, we're not going to recognize that it's an energy boom. We're not, our ancestors really didn't see one. My parents didn't see one. No one has any way to really tell us whether we're in one or not in one. They say there's 20 new shale oil fields the size of 20 Persian Gulfs now being located and found. We had talked to some producers in Nebraska that were telling me there's some big oil fields there now that they're a part of that are going to start to take place. It's all being laid out and mapped out, and they think there's some big fields there. And now the parts of Kansas where they're starting to already boom, and into the Dakotas. Like I said here, Goldman says we'll outpace the world. We just surpassed this week 20-and-a-half-year new highs for crude production. They say we're going to outpace the world by 2017 in crude oil production. I don't think crude's the play. I'd say natural gas is your play. Your guys' play, probably natural gas. Here's the reasons why. We've been drilling like hell for natural gas. We have a glut of natural gas right now. That's why prices are cheap. But let's put all the pieces together. Kind of like Drew said, we got to put the pieces together. What's the U.S. Fed trying to do? Raise exports. Where can they raise exports? Right here. Right here in a big bad way. Here you are, Japan, 16 BTUs, 1,000 cubic feet. 16 in Japan, 10 Russia. We're under $4 here. They're going to start exporting natural gas. It's coming. It's coming like gangbusters, like no tomorrow. Everyone in this world is raced for clean energy. Everyone. You got Dow Chemical. They spent years trying to get their business overseas for energy, cheap energy. Now they're racing to get it back over here for cheap energy. They see what's coming. They see this. They see this. Waste Management, Wayne Huizinga's company, they're trying to convert 500 trucks almost every other day to natural gas. They say there's 12.5 million natural gas vehicles in the world. That's it right now. We have less than 1%. It's going to boom. I truly believe T. Boone Pickens, he's smart, very smart man. He might be right the market, but wrong the timing. He might not live long enough to see it. I don't know. But he's absolutely right that natural gas is probably going to be a play. Power plants, we got a report in the office the other day. Of the next 1,000 power plants coming online, 900 are going to be powered by natural gas. Increase in crude. Here's the biggie I want you to see. In 2005, less than 20% of all drilling rigs were dedicated to crude. Now, that number's wrong. That should be about 80% now are dedicated to crude. They've tapped on they pulled the rigs. They're not drilling for natural gas, they're drilling for crude. But the natural gas, there's a glut right now. They're trying to get it sourced to get it out of the country. There's only one export terminal that gets it out of the country. They're going to be building some new ones. Exxon's trying to reverse flow of theirs. They were importing. The infrastructure overseas isn't set up very well yet either. In Japan, China, those places that are going to need it, they're trying to get those terminals set up. So what I'm trying to tell you is don't be a fool like I am a lot of times. I invested in oil exploration companies. Had some buddies that knew some guys that were going to hit oil. Shit, learning experience. Cost me. Had some guys that knew some other thing. I like what that one guy, when he says, I want to invest in the company that makes the oil barrels, not drills the oil. I mean, because that's where the play is going to be. So in natural gas, I would look to invest in shipping and infrastructure. I think that's where your plays are going to be. I don't know if these companies necessarily are the right fit. Picking the right company can be a little tricky, but like this is Clean Energy Fuels. That's T. Boone Pickens' company that he's invested all that money, and they're going to create the natural gas fueling stations like a Quick Trip or a gas station where you just pull up and actually put natural gas into your vehicle. This is Westport Technologies. They've already done the engine conversions for all the big three, Chrysler, GM, Ford, they already signed contracts with them. They're going to produce the actual engines. This here's Chenery. They're the only one with the export terminal license. Supposedly, Exxon and some of the big ones have had the license sitting on Obama's desk for, I heard, a year maybe, somewhere in there, but they didn't really want to sign it till after the elections. I can't imagine why. Maybe they wanted to make sure they got support or something. I don't know. I'm sure there's plenty of politicking going on there, but they're the only ones now. Who the hell knows? Maybe they got stock in the company or some shit. I don't know. But it's kind of weird that they're the only ones with the ability to do the exporting. I think if we move from there, this TK, hell, I've doubled my money in that stock in not very much time at all. They're the ones that are big with the LNG tankers. They're one of the only ones that, those LNG tankers are expensive, and they're one of the big players in it. And there's others in these areas. I'm just trying to get your mentality to think a little outside the box, and my thoughts are, as farmers and as producers, if natural gas explodes on us, well, shit, we got a little bit of a hedge by owning some of these companies. So if the natural gas is right and natural gas takes, I wouldn't play it in the futures market because of that damn carry. You know, you like try and buy natural gas, but then shit, you get a little rally, and then the next thing you got to roll, and the carry's too big, you get your ass kicked. I just haven't had any luck with it. I think you'd have to have too much money tied up. So I would go out and look for infrastructure type plays and make some investments into those areas to try and insulate yourself that way with your money. And I think you need to start thinking that way with other type of plays and other investments as we move forward. This one, I usually don't do any sales spiels. Try not to anyway. This is the one I actually really like. And I think we have seen huge, huge dividends come from it in the last year, and we've just kind of started offering it to some of our other guys. On our peer-to-peer group, I started doing a conference call once a month and started adding more guys in. It started, I think you saw the people that were here last year, Andy Daniels, one of my good friends, Soren. Someone asked me about Lansing, Bill Kruger. I'm partners with Bill on some ground. All of these guys are kind of part of my core group, and everyone asks, where do I get my information from and those things. And Andy and I get together. We talk all the time. I talk with all the other guys all the time. Tom Willis, he's the CEO of a bunch of the ethanol plants that I'm involved in. And those guys are all part of my network. Well, we get together down in Memphis every year for Memphis in May. We do a benefit deal for Andy's daughter. She had muscular dystrophy, and she was really sick at one time. And so we do a benefit thing down there on the Memphis in May barbecue. And Andy said, why don't hey, start inviting some of the farmers. I start inviting some guys down or something. Invite a few here and there. So I asked a few guys a couple years ago if they wanted to come. Oh, shit, they thought it was the greatest thing ever. They loved it. They loved meeting these guys like Soren, the CEO of Bunge, and Andy, some of these big, huge traders and everything. Just people that you guys haven't had the opportunity to really get in front of and meet. And all these guys are good guys, they're just like me. So not that I'm a good guy, but I hope you guys think I am. But anyway, I mean, they're down-home, good people. And we started networking. And I'd bring them into the group, and we would talk, and they would get to hear information that they normally don't get to hear, whether it's from the fertilizer side or from the guys on the ADM side or the Bunge side of that type of deal. And we started doing the conference calls and things, and it's really paid huge dividends. We brought in 5 or 6 producers that wanted to go farm over in South America. Well, they came on with us. We gave them some of the acreage, and they're over there with us now, and we brought them into some other ethanol plants. And a lot of the investments that come across my desk, I can't do, or they're not in my wheelhouse, or shit, I'm tapped into some other area. So I'll tell some of the guys some things, or if there's land that comes up, or some guys want to go on a group of land. And we started this peer-to-peer group. I've seen a lot of these groups. I had to go out and speak for them. I don't even know what you call them. Jay, what are they called? Peer-to-peer or something? I don't want to say what they are or who they are, but I don't like when they have you guys join these groups, and they want you to do everything together. Like do your marketing together and buy your fertilizer together. And I don't know. I'm not super sold on that right now. Just because I have a hard time with putting the marketing together. They wanted me to help them design a marketing plan that was right. Shit, they got guys from Kentucky up to North Dakota. I'm like, I don't think that can work. I'm not sure you can do it. I'm not sure logistically the way the volatility is in the market. I'm just not sure a lot of that can happen. I think there's some really good things that can come out of peer-to-peer, like we get together here and we network and we tell guys ideas and strategies and things that have worked. We went to dinner with Matt Norman and his group in Iowa. One of my guys from Kansas told him about putting in a fertilizer facility on his operation. Basically, the government would pay, almost 60% of it for the ability to, lock down the fertilizer and secure it. There were some certain glitches and things in the code that made it allowable, and he got it all paid for, basically. And it's an unbelievable operation. You should see it. It's crazy. Talked to some other guys, and they've built some things, and they've seen some ways that the government has allowed this or that. And those are the types of items and information that I love in this peer-to-peer group, and those are the types of things that we like to get out of it. So I'm trying to start that group of producers and key players in the industry, whether it's weather guys or we're going to have guys on to talk that know way more than I do, I want to say, and guys that are high up on the executive side, and we can pick their brain in a Q&A once a month. So I do the once-a-month conference call, try and keep everyone up to speed on what I'm hearing and seeing, and then from there, we go to industry benchmarking and indexing. I want to try and get that out to you on what guys are paying for other things. I don't want them to know it's you or you or you or your neighbor, but I want to be able to throw out and say, hey, this is what we're seeing guys be able to buy seed for. This is what we're seeing guys be able to buy anhydrous for. This is what we're seeing right in your guys' area. And, it helps you guys just try and do a little bit better job on the benchmarking. Cass says, I send these out via text now. Robin said, I got to get better at that. I got to send stuff out via text. I got to do some audio. I know all these other companies do a lot of those things. I try and focus on providing the best research and tools on that end. And I hope you guys can use them and tailor them to fit your specific needs. But now we are trying to get a little bit better about doing these. I just want to tell you my opinion while I'm up here on this everyone sell at the same time and buy at the same. I don't think it works. That thing I put out from the desk, that model account, it is a model account, but it's not right for everyone. You guys understand? People in Washington love me. They produce some of their biggest crops. There's a guy over here in Michigan, best year ever, produced more bushels than ever. Well, he had one hell of a year. You guys in Illinois and Iowa probably want to kick me square in the ass, maybe. Because we got sold a little early for what we saw. We had some sales at $550, $560. I'm not going to lie about it. And then we had some good sales later on. But some of you guys couldn't take advantage of the good sales later on because you didn't have the bushels. So what I'm trying to say is the situation, these cookie cutter things that come out, not just from me, from everybody in the industry, you got to take those with a grain of salt and you got to apply them to your specific business. I know some guys said to me, guys in the office didn't call them enough. Okay. You serious? You're the CEO of your operation. You guys are the CEO of your operation. My CEO at every company I've worked at, they called me and told me I had a meeting. I never called them and told them they had a meeting. I never knew that shit worked that way. But for some reason, you guys in this industry think that we're going to call you up and say, hey, Jeff, sell now. And you say, yeah, okay, yeah, sure, buddy. And then I talk to you, hey, man, did you make that sale? Nah, didn't make it. Oh, I'll just keep doing that. That doesn't work. You're the CEO of your operation. You have to call. You have availability to my staff. All my guys that I got, the guys that have worked for us for years, the guys that have worked on the floor, some guys are fresh out of college. You talk to any one of them. You can talk to everybody. But we don't know when you have a fire. That's what I try and say. The fire department doesn't come over and say, hey, Cameron, you got fire tonight? Okay. Police department doesn't come over every night and ask. I want to be more of a consultant. I want to sit on your board of directors, and if you have an issue or you have a problem or you're concerned about making a sale or you want to look at some different strategies that will work for you, then that's what we want to do moving forward. I don't want to sit and call you every damn day or bug you. I'll do these conference calls once a month and do those things, but you guys have to be the CEO of your operation, and you have to be able to tell us. I'm going to give you an example. Great producers, 15, 20,000 acre guy out in Kansas. He's 95% sold in 13, probably 50% sold in 14. He's talking to me all the time about re-ownership. Got other producers. Got 0 sold in 13, 0, 14. You think they're talking to me about re-ownership? Nope. Talking to me about building floors. Well, what do you suggest I put in the report? I mean, there's not one situation that's the same for anyone in this room. So I want you guys to make sure you understand that. What I've had Mark now do with Ag Hedge, I told him, I said, I can't take these commodity traders anymore. This shit's driving me crazy. I said, I want someone that's going to put out a ton of hedging ideas that we've seen from all over, from all my fund people to everyone under sun. And I want to have those hedging ideas be viable, understand what the risk is on them, what it's going to take to secure them, how much money you're going to have to do them. And then from those ideas, we can glean out and pick what's right for everyone in their particular scenario. Some guys that don't have a lot of line of credit or don't have a ton of money tie up, we may need to use the Mark Gold approach, and we may need to only buy premium. We can only be call buyers or put buyers. That's fine. That's fine. If that's what we have to work with and that's our model, we're going to have to build something around that. Other guys, that might not be the best case. Some guys have an endless line of credit at FCS and somewhere they got 3 or 4 million and they're able to do some more creative things. Some guys like to here's a good example. Guys sitting in this room, won't name names, there's some guys, they always sell a year behind. The other guy sells a year ahead. The guy that sells a year ahead says the guy that sells a year behind is an idiot. The guy that sells a year behind says this guy's an idiot. Well, shit, from where I sit, you guys are kissing your cousin over here. I mean, on a down year, my guy that sells a year ahead, my guy in Kansas that's 100% sold, 95% sold, if we break, well, he's going to be right this year. But last year, when he was 100% ahead, he wasn't right. The guy that was the year behind was right, and he was ahead. It's being consistent with your strategy that's important. Be consistent. Develop a strategy and a plan and stick with it. You take the yield curve and you pull it out over time, you're going to be a winner. It's the guys that get all panicky and nuts and switch their theory. It's like being a football coach. I got to dance with the girl I brought. I mean, if I'm a running team, I'm going to run it down your throat. If I'm a passing team, I'm going to live and die by it. And that's how we got here. You cannot just switch anytime something goes wrong. Not next thing you're a technician, next thing you're a fundamentalist, next thing you're this, next thing you're that. You're going to get whipsawed around and just lose your asses in these markets. You can't follow this guy, follow that guy. I call it, paralysis by analysis. Shit, you can't do anything. You've read so much, you can't make a decision. So I just try and back off that a little bit, and I want to have an operation that we help you guys in whatever area that you think you need focus or help on. If it's fertilizer, I can't tell you the information, but I promise you, within my network, I got some of the best fertilizer guys in the business. Ron Farrell's one of the best guys in the retail side, and he advises some of the biggest retailers in the country. I can get you the best fertilizer info you need. You just got to call and ask some questions. I don't know specifically what you need as a CEO of your operation because I'm dealing with so many people. You guys got to, you can't be worried that you're going to ask a dumb question. Throw that shit under the table. If I'm your lawyer, you got to tell me everything. You can't hold back and say, I'm not going to tell you. I mean, a lot of guys don't even want to tell me where they made sales, and I'm supposed to be helping them. They just don't want to say. Well, shit. I hear what guys make sales at. There's nothing to worry about or nothing embarrassed about. That's what I'm saying. You're going to have to open up, and you're going to have to be honest if you want something like this to work. And the guys that have, and they've opened up, and they've been honest, and they call in, and they talk to us, and they come to think, they love it. Some of the other folks, though, it's probably not going to be the best fit, but you're never going to find the best fit. You're always going to be searching. There's no magic wand. I'll tell my son, there's tons of guys that give lessons and instruction in sports and baseball and this and that. No magic wand. Nobody's waving no magic wand over you, and you're going to just be good. It takes hard work, dedication on your part, and you got to be in charge of it. And then you got to seek out guys that can actually help you, not look to tell you what to do. So I hope that's what we can provide. Chase, Jay, Hendershot, some of the other guys, Mark, around the guys here, they can tell you more about it and how we're progressing, and I hope it gets better and better. What we're planning, and some of the guys we're in Chicago, they want to do is like have some code. We're going to put people's bios in so you know who you're talking to, and we're going to make it, add some validity. So it's not like going out in some chat room, you're talking with some knucklehead, and he's telling you a bunch of crazy shit. We're going to put some things where you can post questions, like we can post questions to Scott about things. We can post questions to some other guys, whether it's fertilizer, whether it's anything with the inputs or equipment with Doc. We've got such great group of resources and great people that I've met. It's just awesome when we can let the guys network and ask questions. I watch when I go to these conventions. You guys endure this shit, like listening to people talk, so you can talk with each other. I mean, it's like you go in and listen, and you're like, oh, shit, I got to listen to this guy talk. And so you can get on the break and go talk to some guys that really know what the hell they're talking about out here, and you guys learn some good things. And so I want to try and create that environment within our group and sphere that we can all use and be useful. So that's my goal moving forward. So if you hear some guys talking about it, or if I ask you if you'd be, if you guys want to be a part of it, or if you got information to contribute, that's really what we're looking for, and that's where we're trying to move. I'm trying to move this business too, so if anyone wants to know any more about it, they can talk to one of the guys. Like I said, that's just really the lowdown on it. That's all I've got. I want to open it up to questions. I know it's been long. We can walk, get drinks. You can do whatever you want to do. I'm going to stand here and answer questions. Fire away. What we got? First one. Throw something up. Don't be shy, I'm telling you. This is your shot. Doc, what do you got? Anybody using Grainbridge religiously? Oh, yeah. Hey, by the way, I paid for that damn thing. You guys, we can use that. I paid for it. Wrote the big check. Dallenberg talked me into that shit. I shouldn't say that. Grainbridge might be watching the DVD or something. I love it, Grainbridge. No, I'm kidding. I don't give a shit what they say. I had to write a check. They wouldn't sell it to individual guys, Doc. Isn't that what the deal was? They wouldn't sell it to individual guys, so Dallenberg called me up. Dallenberg says, hey, is there any way you can get me some strings pulled or do anything with this Grainbridge? I call them up. Shit, they sell me. The next thing I know, I'm hook, line, and sinker sold, and I wrote a check for it. But any of my people can use it. You don't have to pay a dime. So I got it. It sits there, and no one uses it. So I don't know. Like I said, I can't be you guys' CEO. I mean, you guys are going to have to take some initiative on that front. Hendershot, what do you hear on your end? A lot of guys like it. Dallenberg likes it because it pipes right in, Doc, with the CBOT. It pipes in quotes and all that right into your hedge. You can put your hedge positions on there with all your break-evens and all your cash sales, and it ties right in and links to the CBOT, and it can give you real-time quotes on where you actually stand, live flashes, boom, boom, boom. It's neat as hell, but like I said,
we have about 5 guys that really use it religiously, and I'm going to show, if any of you guys want to come back here and look at this, I'm going to show you one of the guys that really does a good job is here actually up front.
Oh, is he? Who is it?
Ogle.
Justin, you like it? All right, there's a guy, Justin Odle. He loves it. Dallenberg swears by it. I don't know. I mean, guys, that's not my wheelhouse. I just listen to what you guys tell me, like getting speakers. If you tell me a good software and you guys want to use it, and I wrote the check for it, so you're more than welcome. I think it's a good thing. You ought to talk to some of the other guys in here. Yeah, they can come back here and look at Isaac Christie's account. He has every single field broken down by input. He's not here. Don't throw him under the bus. He's got it by far the best, so. There we go. Where's Steve at? Where's my traveler, where's my guy that won the travel award this year? Steve, where you at? I don't see him. Where'd he go, Chase?
Which Steve you looking for? I see one standing up.
Whit.
Steve Whit. Oh, yeah.
He leave?
Right here. What do you want?
No, he don't need the mic. I was going to tell everyone Steve's travel experiences.
Yeah.
You guys will love it. He wins my award for the year. Oh, I'll tell him. You want me to tell him?
I can tell.
Get up here and tell him. Listen to this, guys. Some of my guys had to come in by train, some by plane, some of that shit was all screwed up. You guys are going to love this story when Steve shows up and tells me.
Yeah, well, this is not my...
Take it away. Tell him, Steve.
This is not my proudest moment. Coming into town last night, I was coming from the north. Terrible day driving. White knuckle the whole way. I was kind of tired. Well, I turned off. I didn't have any directions. I was headed for the Westin. So
had no directions in Kansas City. Got off.
Yeah, so I turned
off over
on...
in KCK.
Yeah, turned off on 70. Got over there, pulled into a gas station, called the Westin, got my directions. Well, then there was this... Well, he was darker than I was. I asked him, how do I get back on 70? Well, so then, make a long story short, another buddy runs out, hey, give us a ride over to this other convenience store. So I give him a ride over there. Get over there. There's snow this deep. I'm driving the van. It's only front-wheel drive. Get stuck. Them little lazy suckers, get out and push. Huh? Push? What would that be? You get out and push, sir. I'll drive the van. So they...
Listen to this. So Steve gets out and does it.
So I get out, and I'm trying to push the damn van out. One of them gets into drive. Well, all my stuff was sitting there in the middle console, but I had covered it with my coat, left it covered there. Well, you know where this is going. He's laughing up here.
He gets in and all shit's stolen.
So finally, I get on my way. I head back. I get to the Westin, no problem. Get out to go in there. I ain't got no billfold. So
no ID?
No ID, no nothing. I've got nothing. I got the clothes that I'm wearing. I did have my phone. They didn't take the phones. So anyhow.
And the Westin
helped me out really well.
They gave him $100. So they gave him $100.
And Kevin helped me out.
And I gave him some money. But I'm like, you got to be shitting. I mean, can anything else go wrong with people traveling? The drive was bad enough. What did it usually take? 4 or 5 hours? It took you 10.
Yes, it took double the time
to get here. Battles the snow, gets here and gets his shit stolen right before he even gets to the hotel. You're my winner, Steve. You get the award. I don't know what we'll have next year for you, but something. Too funny. Anybody got any questions? What to do with what? When to sell your crop? Fire. Give me the tough ones. I know some of you were asking me already. Chase, what do we always hear? Okay, here's the deal. You haven't sold yet. 2013, when to make a sale? Now. I don't think you can jack with it. I think it's too dangerous. we're 40%, and I'm kicking myself for not getting more done. You know, I put those sales out there for in beans at what, $13.50? Shit, we got to what we get to, Intershot? $14.49. Tried to get cute like you guys do. When I tell you never to do that, I did it, burned me. So I don't know. I just think you got to be careful. You got to get 30, 40% off the books. You got to get the risk covered at least. You guys have got really good insurance policies. You might not have to be super aggressive. You don't have to go nuts. I mean, if you got good insurance, we're probably going to lock in 568, 565. So I just think with this type of risk, you just have to be careful. As far as 14 is concerned, that's a whole different, that's a squirrely bag of nuts there. That's a bird of a different color. We tried to make sales at 575, didn't happen. Above 575 didn't happen. I took that half-quart shot I said in wheat, above 850. That looks like it's paying big dividends. You got to be looking at 14 to some degree. I think some of the guys in here are aggressively looking at 14, whether it's in the form of selling calls. Hell, you can sell calls pretty damn good right now. Pick up an extra 30 to 40 cents. And then you're going to have to hunker down. When we get down in those price ranges, if we stay down there, we might have to just sell call premium for a while and try and just add some revenue to this thing. And then if we get the pop, well, we make the sales and we're probably going to have to eat those calls. But you're going to have to get that line of credit set up or somehow be able to finance some of those positions as you move forward with your hedging. So it's going to be different for everyone. Go ahead. What do you got?
Usually in the history, we lock up all our fuel in January, February for the year. What's your thoughts on that this year?
Locking up fuel. Remember, we did a big chunk of fuel, and then we tried to get cute with the fuel and lock it in under 300. That didn't happen. Got down close, never did work. So I think we're going to have to go month to month on the fuel for a little bit. I wouldn't lock in fuel right now. I don't see it a reason to lock it in. I think there's some fear. We broke $5 in crude this week. I think that there's a little bit of fear that we're traditionally running ahead of pace that we should, and that's causing prices to inflate, and guys are worried that could be a little bit of a runaway train as we move forward. I don't think you got to play it that way. I would just be careful here. I would just steady Eddie, just use what you need. If you don't have anything locked in, I'd go just month to month or short term. Yeah, Scott?
Crude really sets the tone for our ethanol price, which sets the tone a lot of times for corn.
Right.
Have we talked about crude long term today?
Not necessarily. I think the crude long term, hell, we used to trade crude when it was back under $20 a barrel and you didn't have the issues you have. I think there's kind of a temporary floor in crude with this Saudi issue. The Saudi government has had to finance. They really did what we've done. They've had to calm down the masses, and the way to calm down the masses was to give them money. And so their balance sheets have exploded. And the Saudis really need crude to stay around $75 to $80 or higher for them to be able to finance their debt and finance their budget. So, I'd say crude, when you get under $85, when you get in that area, you got to be locking fuel in. Robin and some of us talk about those things when they call. When you watch that crude get below there, the Saudis are going to either tighten up supply, which they did, and then we had a spike higher, and now they're talking about they're going to increase supply. Just this week they said they're going to start increasing some supply because they don't want to see crude prices get sky high, because what'd that do to them? It hurts them. longer term, we saw what gasoline consumption's doing now. They really cut their own throat when they let the prices go apeshit sky high before. So they don't want prices to go too high, but they can't afford for them to go too low either. So, you know, depending on what happens with Iran, that's your big wild card. If Israel decides to go nuts, there could be a huge spike. Don't let yourself get caught up in that mix. Have enough fuel on hand where you're not buying at those huge, huge inflated premiums. I don't think we'd stay there, but there's a chance you may get hooked into buying a little bit at a really costly level. So I think that temporary floor is probably, unless the U.S. just continues to come on like gangbusters with more and more crude, which I think is going to take a little bit of time, I think that floor is probably at 80, 75, 80 bucks. So you see crude drop below 85, I'd be talking to your diesel guy. Chase, anyone? You guys all ready to get out of here? We good?
All right.
That's it. I appreciate it. Thanks, everyone. Thanks for coming. Have a safe trip.